All right, let's talk about the stock market. You hear about it all the time. Bulls, bears, billion-dollar bets. But let's cut through all that jargon. In the next few minutes, we're going to break down what it is, how it actually works, and most importantly, why it matters to you every single day. You ever hear people talking about the market and it just sounds like a completely different language? Yeah, you are definitely not alone. It can feel like some exclusive club with a secret handshake, but trust me, by the end of this, you're going to have the key. Okay, so first things first, what even is the stock market? Before we can get into the crazy charts and numbers, we gotta build a solid foundation. Let's figure out what we're actually talking about here. At its heart, the stock market isn't one single physical place. It's much bigger than that. Think of it as a massive global network of marketplaces, kind of like eBay or Amazon, but for buying and selling tiny pieces of the world's biggest companies. And that's really the core idea right there. A share, or a stock, you'll hear both terms, is just a small slice of ownership in a business. Seriously, if a company has 1 million shares out there and you buy just one, you now own 1/1,000,000th of that company. It's really that simple. So why does this whole thing even exist? Well, it's actually a pretty smart two-way street. For companies, it's a way to raise a bunch of money, they call it capital, to build new factories, hire people, or invent the next big thing. And for you, the investor, it's a chance to own a piece of that success. You can get rewarded in a couple of ways. Sometimes companies share their profits with you, that's a dividend, or you can sell your piece later on for a higher price. All right, so we've got the what. Now for the how. How does all this work? How do billions of dollars and millions of shares change hands so fast every single day? Let's get into the nitty-gritty. So all this buying and selling happens on these big organized platforms called exchanges. You've probably heard of the big ones like the New York Stock Exchange, the NYSE, or the tech-heavy NASDAQ. And the key thing here is, these aren't the Wild West. They're highly regulated to make sure everything is fair and transparent. So what makes the stock price jump up and down all day? It really just boils down to classic supply and demand. If everybody suddenly wants to buy a stock and not many people are selling it, what happens? The price has to go up. And if everyone is rushing to sell, the price tumbles. It's literally a global negotiation happening millions of times a second. Now, inside this market, you've basically got two types of people. Think of it like the tortoise and the hare. First, you've got your investors. They're the tortoises, playing the long game. They care about how healthy the company is and plan to hold on for years. Then you have the traders. They're the hares, zipping in and out, trying to make a quick profit on those daily price swings. Both of them are essential to making the market work. Okay, enough with the theory. This is where it gets real. Let's connect all these ideas to the actual numbers you see flashing across the screen and see how this all plays out in the real world. So to do that, we're just going to grab a snapshot of the market from a single day. Let's say today, January 27th, 2026. So check this out. We're looking at 3 huge, well-known companies. You can see Apple is having a pretty good day, up almost 3%. But on the flip side, people seem less excited about Nvidia and Tesla, and their prices are down. Every single one of these little red and green numbers is the end result of millions of people making a choice to either buy or sell. And that, of course, brings up the biggest question of all. Why? What's going on behind the scenes that's making thousands of people feel good about Apple today, but maybe a little nervous about Tesla? It all comes down to one thing: information. The market is like this giant, hungry machine that just eats up news all day long. A big trade deal gets announced. Boom, that can lift entire markets. A company has to do a massive product recall. Oof, you can bet their stock is going to feel that pain. A different company gets a huge new investment. Their stock could absolutely soar. Every single headline gets priced in. Okay, this is probably the most important part of our whole chat. We've talked about the what and the how, but now let's talk about the why. Specifically, why any of this should matter to you, especially if you don't think of yourself as an investor. Because here's the thing, the stock market is so much more than just a place for people to trade. It's really kind of like a vital sign for the entire economy. A rising market usually signals that people are confident and that the economy is growing. A falling market, on the other hand, can be an early warning sign of uncertainty or trouble ahead. And this right here shows you that in action all across the world. Look at Japan, their market's up, driven by good news in banking. Meanwhile, Indonesia is having a tougher day because of some struggles in its key sectors. And remember that EU-India trade deal we mentioned? You can see its effect right there in the UK market. Every market tells its own local economic story. So, when you put it all together, the market is playing a few huge roles. It's the engine that fuels new businesses and innovation. It's that real-time health check for the economy. It gives regular people a powerful way to build wealth over time, and it kind of forces big public companies to be open and transparent about what they're doing. And here is the bottom line. Even if you swear you'll never buy a single share of stock, the market is already a part of your life. It's what makes your 401k or your retirement plan grow. It influences whether companies in your town are hiring or laying people off. And it helps fund the research that created the very technology you're using to watch this right now. In the end, maybe the best way to think about the stock market is as a giant, real-time voting machine. Every trade, every buy, every sell is a vote of confidence or a vote of no confidence in a certain company or a certain idea about the future. It's the grand sum of all our collective hopes and fears, which leaves us with one last really big question. What future are we all betting on today?